Whilst it's great to hear about the macro environment we're all going to operate in the coming years, we thought it would be useful for business owners to hear about some of the more practical things that they can do as a result of the pandemic, something a little bit nearer term. We thought there were 4 areas which impacted every business, regardless of its size or sector: property, people, technology, and funding. First off, we have a report from David Gwilliam, who's been undertaking a property review of our own real estate at RSM.
As the vaccination rollout starts to move at pace, businesses need to start to plan their property strategy for the new norm post-pandemic. This is particularly so for those businesses with office-based staff who've been working mainly from home over the past year or so. There are some 12 million office workers in the UK, so the logistics of the post-pandemic strategy will be significant for many businesses. There are 2 key lessons from the pandemic that will likely play into this strategy. First, that recent technology advances have shown that people can work remotely and be effective, at least some of the time. And second, virtually no one has missed the daily commute. As a consequence, many businesses are looking to a hybrid arrangement going forward, involving a mix of remote and office working. This throws up a number of issues to be considered, such as: what's the role of the office? How should the office be configured? Which staff attend the office and when? And how much office space will be needed? In a hybrid arrangement with a degree of remote working, the role of the physical office is a heightened consideration, and there are 4 key elements to focus on: bringing staff together for collaboration, for development, to build relationships, and of course for social interaction, to build and maintain culture and values, to attract and retain talent, supporting teamwork and a sense of belonging, to build and maintain the physical embodiment of the organisation's brand. Given the future role of the office, many businesses will need to consider reconfiguring their offices with a move from standard desking to more open-plan collaborative workspaces. Shared space, including for social interaction, will become a priority. Flexibility will also be important to make the most efficient use of space. So look out for fewer fixed meeting room space and more booth-type seating, as well as front of house becoming more open plan, with podium-style receptions and flexible work and touchdown space. Equally, pod-type private and quiet areas for video calls will likely be a common feature. Key to making a hybrid arrangement work will be footfall management, not just controlling the numbers, with collaboration, staff development and team building being primary objectives of time in the office. Ensuring the right mix of staff on any given day will be vital. Whilst technology in the form of desk and meeting space booking apps can play a part in that, line management will need to take a lead role in helping manage and sort the logistics, with forward planning a key element. Much has been made in the media of business districts, particularly in the larger metropolitan cities, downsizing as a result of increased remote working and a reluctance to commute. Time will tell. However, it is the case that for a number of businesses, the reduced footfall combined with a more flexible use of space may well reduce space requirements going forward. So there's certainly an opportunity for businesses to review their estate management. With the commercial property market in a state of flux, there may well be good deals to be done and overall property costs to be reduced. So as we plan for a post-pandemic future, there is much for businesses to consider to future-proof their offices and manage their costs.
One of the areas we found most surprising in our own property review was the level of utilisation of our real estate prior to the pandemic. In some offices, we were at 60% occupancy, and even in our most busy ones we thought were quite full, we were only in the mid-80s. The pandemic has given us an opportunity to think more boldly about our property strategy. Obviously, we're well aware that to implement a decent change in our property strategy, what we must do is bring our people with us. So we have a report now from Steve Sweetlove from our HR services team.
Whilst the pandemic shocked the world, it created a once-in-a-lifetime challenge for business leaders to respond to, and an opportunity to reimagine how organisations are run and how our people operate. The way we work will not return to how it was a year ago. Many organisations will require to switch to more remote and flexible working arrangements almost overnight whilst remaining operational and productive. Whilst we don't yet have certainty on how much of what we grew to consider normal will return, or what will be different, we can say with total confidence that it won't be the same. Some have found the transition difficult, the cause of much anxiety, but many have enjoyed their working lives more since adopting more remote and flexible working patterns. Business leaders should therefore anticipate a mix of responses when the time comes to start the return to the office. Requests for permanent changes for those who have had a taste for reduced costs and time spent commuting will increase. Employers recognise that many of the working practices forced by the pandemic are here to stay, and this may suit some organisations. It will enable them to both reduce the amount of office space required and provide the opportunity to restructure teams based on requirements. Most pay structures and organisational designs are focused on inputs rather than outputs. Who is on site at any given time? Who does what when? Rather than what is achieved and delivered. We believe 2021 could see business leaders review their organisational design to see if further efficiencies and incentives for high performance can be introduced. As working practices evolve to a hybrid model, care will need to be taken to ensure that their management skills adapt to ensure performance as usual. As I touched on earlier, performance will need to be measured on outputs rather than inputs. Reviewing and measuring the finished work from employees, rather than the effort put in, could see different people rising to the top. It's an excellent opportunity for business leaders to engage with the HR function to ensure that A, jobs and departments are well designed, and B, that there is an effective appraisal system in place, one that allows goals to be set up and measurable so that everybody knows what success looks like for their teams and themselves. Those organisations that engage and keep talking to their employees through the various mediums of employee voice forums and staff engagement surveys will be better able to gauge how their workforces are feeling. Taking on board feedback and being seen to listen when rebuilding the workplace will see increased buy-in and engagement from employees. The last point that I'd like to make is that the effect of the pandemic on some groups of employees varies. We should be looking at how different groups of workers have been affected by the pandemic to ensure our diversity and inclusion strategies are not adversely affected. Recent commentary has warned that women are falling further behind men due to COVID-19. They said women were more likely to be furloughed and will be at a higher risk of redundancy when furlough does end. We'll look to future reporting cycles with interest to see how the gender pay gap trend moves. The focus on pay transparency and fairness amongst different groups of employees is set to continue as a theme for organisations. The Black Lives Matter movement and the focus on pay parity amongst different ethnic groups is likely to feature on people agendas in 2021. Even without anticipated legislation coming from government, RSM has seen a growing number of clients show interest in ethnicity pay gap reporting. Many organisations can complete most activity remotely with little detriment to output, and the majority of employees welcome flexibility. There is, though, still a strong case to be made for in-person interaction, to facilitate collaboration, growing team cultures, and encouraging creative thinking and problem solving. Extended periods of remote working can lead to the work-life boundaries being compromised, leading to the working day being extended and in some cases reducing mental well-being. Encouraging employees to trade some screen time for a little sky time brings me to the middle of this muddy field today. Given these pros and cons, organisations have to rethink their working arrangements. This recalibration will eventually settle on a sustainable new normal, likely in the form of a hybrid workforce and workplace.
Wow, it's amazing the lengths of people will go to avoid homeschooling. For too long, businesses have been able to rely on bringing people together and property as a way to embed their culture and brand values. Simply, in a world where we're not in the office, we're going to have to work much harder. Our people want to know that they're working for a business which does the right thing. And increasingly, as we're seeing with the news from Unilever recently, so too do our customers and suppliers. Hybrid working brings its own challenges to infrastructure, to security, and to data management, which leads me neatly on to a report from Chris Knowles, our CTO.
Hello everyone. I think it's no exaggeration to say that the pandemic will be seen as a pivotal moment for the adoption of digital technology. If businesses weren't already planning their digital roadmap pre-COVID, they absolutely are now, or at least they should be. Of course, that is because at the moment during lockdown, most of us have no choice other than to market and distribute products and services electronically, and to fulfill them digitally wherever possible too. But digital and technology are huge topics. So what are the priorities? Let's start with employees and remote working. By now, we should all be well beyond the stage of just giving staff the basic tools to do their work remotely. After all, most of us are all too familiar with spending entire days on Teams or Zoom. 2021 will be the year in which we think more deeply about how digital technology can make staff feel more connected and more engaged. So think about tools that bring teams together virtually to collaborate in new ways, ranging from online whiteboards such as Monday, to email alternatives such as Slack, and collaborative mind mapping tools for brainstorming such as Mind Manager. You can't reproduce the team spirit of physically sitting with colleagues, but there is a lot more you can do than just roll out Zoom to make your people feel engaged. And start thinking too about how remote staff will collaborate with office workers when physical property spaces begin to open up later in the year. At RSM, we are rethinking our shared workspaces in our offices to allow those in the office to work smoothly with those who continue to work from home. So there's a strong tie-in with your property strategy too. Every business, if not already, needs to be actively defining their digital customer journey. So how can you extend your brand reach with digital comms and marketing? How can your value proposition translate into the world of digital product and service delivery? Again, this is an area that we at RSM are focusing on. So for example, how do you deliver an audit remotely and digitally? Can your business add value to customers through digital channels in new ways that might create new revenue streams? This is a crucial question for all businesses to be asking. Then you need to be thinking about core business operations and how automation can replace some of your manual, routine processes. With the advancement of automation technologies such as RPA and intelligent automation, we're seeing businesses in all sectors ask this question now more than ever. And fundamental to this is having a proper data strategy for your organisation. All digital business processes are enabled by data, and having a proper understanding of all the data that flows through your organisation is absolutely crucial to digital adoption. It's essential for delivering automation, for driving analytics insight, and for the adoption of artificial intelligence, which, by the way, is coming at varying speeds to all sectors in the next few years. And supporting all of these digital components, of course, are your core IT infrastructure and cybersecurity strategies. You'll need the skills either in-house or from a third party to set up and manage a modern, software-enabled comms network across your business and to make sure it's secure. We're seeing businesses of all sizes become vulnerable to targeted cyber attacks such as phishing, denial of service, or ransomware, and you can't let yourself be the victim of one of those without an advanced plan in place for how to respond, and of course ideally to help prevent such incidents in the first place. So to sum up, this is a huge topic, but you absolutely need a digital strategy for your business, driven from the top and covering areas that I've mentioned. And if you didn't think you needed one before the COVID pandemic, you do now. A digital strategy starts with thinking about your value proposition and how it can be enhanced by digital engagement with your customers. It needs to cover data management too, as the basis for driving automation, analytics, and AI in your business. And don't forget to cover the basics that enable the digital strategy too, the digital skills, infrastructure, and cybersecurity, without which your digital strategy won't succeed. 2021 is going to be quite a year for technology.
In my day job as an M&A advisor, we're seeing an increasing level of scrutiny in a business's IT infrastructure, its IP, data management, and data usage. Levels of IT due diligence, which used to only be undertaken within businesses which actually were software companies themselves, are now being taken across the board. IT, technology, data management is now seen as business critical, whatever you do. To take advantage of the amazing opportunities that it brings, everyone needs to make sure that their business has its right foundations, either within the team are upskilled so they can make use of these tools, or if you have an outsourced provider, which many people do, that is actually fit for purpose for the future and really giving you strategic input at the boardroom table. Finally, and another area we're seeing a lot in our deals, there are just an increasing number of businesses within our client base that we know are experiencing difficulties as a result of cyber attacks. Some businesses don't seem to recover, even if they have taken all the precautions and got insurance in place. The bit that they often miss is the cash flow impact, the working capital damage that could be done with a serious period of downtime within their business. What they don't have is the tools to really plan for the unknown. And I think we've all realised, thanks to COVID, that having some sort of plan for the unthinkable needs to be in every business's armoury. We have a report now from Gareth Harris, who works in our transactions team, to help you set about doing that.
The last 10 months have seen the most significant economic impact in our lifetime. The steepest and furthest fall in GDP, followed by government intervention not seen since the Second World War. However, the impact in our economy and on business has not been evenly spread, with some areas thriving, but others completely shut down. For example, events businesses or large parts of the hospitality trade. Whilst the government support has been staggering in quantum, with loan guarantees, CBILS and particularly the bounce back loans totalling over 60 billion, furlough schemes in excess of 50 billion, and deferral of many liabilities, particularly HMRC. The result is that many companies have had no choice but to take on more debt in order to survive, many of which were successful and thriving businesses before COVID-19 and still can be. Having taken on this debt or additional liabilities, the challenge is how or if they can repay this debt when trading gets back to a new normal. There will be some pent-up demand as vaccines start to take effect and the economy opens up again, but this will also not be evenly spread. And if you're one of those unfortunate businesses where profitability may not spring back quickly, you could easily find that the current capital and debt structure is no longer appropriate. I'm going to share with you 5 short practical steps you ought to consider if you're in that position. Number 1, take some time out and consider your personal motivation. Take some time to think about why you do the job you do and what you've achieved over the last 10 months. It's too easy to forget about it and get caught up in the day-to-day, but try and focus on the positives. Consider what motivates you and your senior team. Is there sufficient incentive in place to drive you to perform over the next few years? Or are you going to be marking time, working for the lender or other stakeholders? What's in it for you personally? I don't think you should be afraid to consider this. It's important that you have the continued determination to drive the business forward, and that may not be true in the current structure. 2. Reality check. Be realistic about where the business currently is, whether it's carrying too much debt. Do you need money which is not available to invest in the future, such as technology? Reforecast and make sure you have some realistic forecasts, which have a downside scenario built in, and don't rely on a salesman's forecast. In particular, be realistic about any bounce back planned. 3. Trusted advisors. We all have them. Sometimes it's as simple as your mum or dad, but often it's a friend in a similar business, or your lawyer. Now is the time to use them, lean on them, and if they refer you on to someone else that they trust, again, use and listen to them. We all need someone to check things with, so don't keep it to yourself. Number 4, early engagement with stakeholders. If you think that some form of restructure might be necessary, you're going to have early engagement with your key stakeholders, whoever they are, be they lenders, shareholders, key customers. You will need their support. Prepare and go with a plan. Don't just present them with a problem. It doesn't have to be perfect or the finished article, but you must have a plan. 5. Always have a plan B. I've learnt from bitter experience and 20 years in restructuring environments to always have a plan B, C, D or even more. It can be as simple as layers of negotiation to fall back on or a fully worked up plan B option. But in my line of work, typically we'd have both or more. So, to recap. Number 1, take some time out to consider what you've achieved and your motivation. Number 2, reality check the situation you and the business are in and reforecast. 3, use your trusted advisors. 4, consider early engagement but go with a plan. And 5, always have a plan B. Now I'm going to end on a positive note. Despite my job as an insolvency practitioner, I am actually a born optimist. Restructuring is a word we are going to hear more in 2021, but it doesn't have to be a scary word or a scary process. Done in the right way, it can reinvigorate a business and provide it with greater stability and headroom to ride out what is going to be a bumpy recession for many.
Gareth's first point really resonated with me. We regularly have to sit down with owners and management team when we're out to go and talk to them about an M&A transaction, and the first question we ask is, what do you want? What do you want to achieve? You'd be amazed at how rarely people really know. I think as we go through and come back into the office and deal with what will be a period of very significant change, it's vital that people ask themselves that question. It is not going to be easy, even if you're in a sector which is absolutely flying. In March or April, when the pandemic hit and the offices shut down, as you can imagine, in my day job in M&A, actually the deal environment was pretty depressing. And there was lots of talk about how this crisis was a mirror for what happened in 2008. Actually, it has proven to be, and is obviously completely different. So rather than a shortage of capital, what we have in the current market is actually trillions of capital, which is uninvested. So whilst Gareth has talked about the things which are, how do you manage when things aren't going quite so well, the reality is there are a lot of businesses out there where the pandemic has actually been pretty good for them. And now, bizarrely, is a pretty good time to be thinking about how you can take advantage of that and of all the money that's in the world at the moment. So everything from £1 trillion of uninvested money in private equity funds right now to the capital markets and public markets, there is money available with which to invest. So it is worth looking at your business and thinking, do I want to divest a piece of it so I can raise some money to invest in other areas which are more core to my future? Or do I want to raise some money to make an acquisition? Or personally, do I not really want to carry on? Do I want to sell a stake in my business or actually exit it altogether? Because there is capital around, what that does mean is that good deals are there to be done. And it doesn't mean that you can only sell if you want to sell cheap. In order to do it though, it's never been so hard to prove what your normal trading is, because we certainly just haven't been operating in normal times. And what we found is what's needed by a buyer or an investor is a real granular level of detail to explain or articulate what your trading has been like through the pandemic. And that's not just the downside, but also why you've been trading ahead. What does normal look like from a working capital and from a trading perspective? What we do find is that very rarely within an organisation has their finance function really got the experience of what is needed. And so I suppose on my wish list or shopping list of things which I think people should be thinking about is a real review of actually what are the capabilities within the finance team. If you were asked those questions, could your management information provide all the answers? Or do you need to have a look at it alongside a better forecast and I suppose some what if type analysis? I suppose now's the time to sum up from today. So I've got a few sort of pithy comments to leave you with, but my overarching view is that people shouldn't be planning to get back to what was normal, but thinking ahead about what they want to be and how they can take advantage of what have been very dramatic changes to the business world that we operate in. And so my thoughts are agility, not property. Outputs, not inputs. Data, not paper. Realism, not pessimism. And plan, not head in the sand. although the chance to lay on a beach in the sun is something I'm sure a lot of us are craving for. Thank you for listening, and I suppose that brings us on to question and answer. So Simon, do you have any questions for me? And please, no curveballs this time.
Thanks for that, Kirsty. Curveballs is my middle name. I'm sure to give you a pretty hard time on this one. Look, some really, really interesting ideas from our colleagues there. So thanks to David, Gareth, Steve and Chris for their insights. I think that was brilliant. And just for the avoidance of any doubt from any of you watching it, we haven't turfed two of them out to live in a field. That is just their own choice. It's just the way they roll these days. I should also just remind everyone, look, we've got these chat rooms operating. Don't be shy, go and have a look. I mean, you've heard a few interesting ideas there. Kirsty, I like the data, not paper idea. But perhaps go into the chat rooms and perhaps share your own ideas and thoughts with your peers in your various sectors. As I say, don't be shy. It's all about collaboration in a crisis, after all. Anyway, Kirsty, let's have a look at some of the questions, and in no particular order. Let's start on property-related issues. Have we seen an openness from landlords to sensibly, and I think sensibly is the key word here, sensibly talk through property and space need requirements?
I think where there is lease events coming up, which are in the relatively short term, absolutely, the landlords are being practical and pragmatic. I suppose the reality is what they don't want to do is lose tenants because who else is going to take the space? So we have found, and certainly within our clients, we are finding that, yeah, they are being pragmatic. That doesn't mean everyone's sat there giving rents away because, actually they've got an asset class of their own to manage. But I think it now is a time to negotiate. And certainly within the restructuring business, speaking to the landlords and being that, actually talking to them and having a realistic conversation about what needs to change. Because the option, if actually the fixed costs don't come out, it could be much, much worse in terms of administrations, etc. So the answer, I suppose, in short, is yes.
And I guess it's not just about the rent, is it? It's also the service charges. It's around dilapidations, isn't it? It's the whole kit and caboodle, as well as fit out costs and the capital investment required for that. A supplementary question. Go on, sorry.
I was going to say that in some markets that actually rent-free periods and stuff like that have been around prior to the pandemic, that we'll see that continue as a dynamic.
Yeah, I know that's a really good point, actually. I think we should probably expect to see more incentivization from landlords, just because of the general oversupply in the marketplace. Supplementary question, the first semi-curveball. Kirsty, can you share with us any details around what we at RSM have found when we've been doing our own property review, which David referenced, and how we see workplaces of the future fitting in with a hybrid working model of home and office working?
Well, certainly we've seen there are huge efficiencies and savings in overheads. For a more working from home environment versus people traveling around the country, sort of going back to the economist section before. So sort of that travel for business, lots of questions about why. In terms of space, what works for us, and this isn't going to be the same for everyone, is that idea of banks of desks and auditors lined up one after the other in small spaces, working away to deliver their work. We don't see a return to that. We think the office is there for collaboration and for team building. So I think the space will be more flexible and needs to be more capable of some people in, some people remote, something which actually has historically been quite difficult. I don't want to steal Rob's thunder, and obviously if I get it wrong, then I'll be taking a big gamble there. But what we don't see that not being in locations in physical geographies is the right answer for us. Some of our competitors have seen that, and that might be right for your business. We do still think feet on the ground in locations is key to us communicating with our market.
Yeah, thanks, Kirsty. I should just say Rob is our own CEO, so we'll be hearing from him a bit later in the CEO session. Let's move on to technology, Kirsty. So a couple of questions relating to tech. And I guess this one actually aligns to your day job and linking in with the restructuring and the financing teams. Is it too early to be talking about technology investment and longer term systems changes and implementations whilst we're still in the midst of the pandemic? And I'm referencing also back to the difference in view from Joe that we heard earlier. So is it too early to be talking about significant tech investment?
Sort of I suppose a counter view from me is that I think we might be, I probably agree with Joe, I think we might be a little late. I think a lot of businesses have been cautious and thinking about what is going to happen. There's been a huge unknown as we've gone into this pandemic around what is going to happen with Brexit, how are we going to trade, and I think investments have been put off. I just think it's been a step change, and certainly my view is businesses that do not have a good handle on their data and a good digital interaction with their clients, and that sort of granular detail and analysis of it, and understand why and where, I think they'll be valued less, in an M&A environment. So it is a core piece of a business's value going forward, and so actually, if your business isn't struggling, there is money around, and that those are good investments to make.
I don't know whether you're going to be able to answer this one, but if we're talking about a digital strategy and creating that digital strategy, where on earth does one start? I'm not sure I know the answer to that.
I've got a really, really good answer to it, and my place to start would be to pick up the phone to Chris.
Yeah, absolutely. Pick up the phone to our Chief Digital Officer. I'm sure he will quite quickly tell you how to structure that system architecture journey. There's just been a question here I've got on screen. The construction industry has fallen significantly behind other sectors over the past decades with little innovation. And the pandemic has created a lot of debate about how the industry innovates and uses technology to catch up when margins are very thin. Does this create a threat to UK businesses from overseas tech-enabled businesses? I guess the answer is yes.
I think I'd say the answer to that is yes. I mean, there have been some developments in BIM. It's slow. And I think the construction sector here is quite a mixed bag. So within where people know there is money, there is also, I suppose, uncertainty about how it will recover after the pandemic. So if you're in construction and it's related to infrastructure spend, so more of build it with Boris, then actually that part of the sector is booming. The margins are thin, and so what people need to do is be able to project plan better and remove human error. So the idea of just everything being controlled by the guy, unfortunately, typically on site without the core data. How do you manage that process? So there are developments. I can't say if we're better or worse than the rest of Europe, but there are a lot of European players within our market. There are other challenges which construction have. So if you're in a business which basically has been part of commercial development as opposed to residential, that is incredibly tough. So, right now, what commercial development, what new space do we need? Although actually redevelopment of that space, I think in the midterm is coming if businesses can hold out. And I think finally, I think for the first time, we may be in a position that we will actually hit our house building targets. There are the freeing up of regulation for planning. Again, I think we may see a boom in house building. What the real problem is with Brexit is actually where is the labour? Do we actually have the skills? So one is technology, but two, you still need people to be able to be on the ground. And so whilst it's not a data-led or digital technology drive, things like modular build, we must be more efficient in how we get these buildings completed. So we are seeing a lot of investment and interest from the equity community in those areas to sort of support that growth. So I think a mixed bag, I suppose, is my my view.
I mean, it's interesting, that whole modular construction piece, which also links in with more environmentally friendly construction techniques and buildings generally. There's a linked question. You mentioned funding there, Kirsty. There's a linked question in terms of what do you think financial institutions need to do in order to create funding lines that will support the construction sector in terms of their technology infrastructure development?
That is a really good question, and I would say this is the area of the market where I think there is much there's not as much heat in the appetite from an investor community. So it is the bar is higher, definitely, to attract that investment. The nature of the work in terms of its project base. Projects which spread across many months, sometimes years. The profitability within those businesses, even a successful business, they can get it wrong, and one bad project can take the business down. So from a bank perspective, it's hard to get much leverage within those businesses. And the same at the other end from an equity play, there is some fragility there. And I think, again, you need to look at sectors where the money will flow. So I don't think there's an easy answer there. I think actually that it's one of the sectors, if the government wants us to build our way out and it wants houses and it wants us to have new roads and rail networks, and then there may need to be some sort of government support, a continuation of CBILS and some sort of government-backed scheme to help it.
Yeah, and I think it's going to be interesting to see the government's stance in terms of rebalancing the regionalisation of the wealth of the UK economy around the different regions, and incentivisation like this might be one of the plays. We have a tech-related question now, Kirsty, or semi-tech. It was related to some comments Chris had made relating to the value proposition created through digitalization. And I guess it's, would we see this digitalization extend to a digitalization of most of an organization's complete operating model, just the way they do business? I guess yes.
I think the answer to that is simply yes. I think that is the challenge for every business. I sort of said data, not paper, but that view of we need to take hands out of processes, and I think this also came up in Joe's talk earlier. But the cost of delivery, if we can digitalize it, it becomes it means it's incrementally just profit, and so that change will add value, and actually proving you've had that change and being able to manage it. And some changes actually will mean that you can't charge for things that you have traditionally been able to. So actually, what is your value proposition? These are all challenges that businesses are facing right now.
Look, I mean, I there's an example I use in that regard, Kirsty, and it's really playing out to the bean counters in the audience, or the ex-bean counters in the audience that have moved to business leaders. And that is, question your own teams in terms of, the use of Excel. Excel has always been used as a fantastic tool 20 years ago, but it is really that conduit between one piece of management information and another, and there are so many ways that a fully functionally, properly constructed system architecture with an ERP system could just make operations so much more efficient and less error prone.
So the other piece on that, Simon, just to interrupt. So Excel's so 2020. And so the big move here is is actually around things like Alteryx and Power BI. So the data analytics tools, which can deep dive, sit across your platforms and scrape data and actually manage it. And the efficiencies you can drive from that are just enormous. The key there again is skills. And there's a shortage of people with these skills. So training people up and understanding the capabilities and power of some of these platforms now is crucial.
Do you know what? You're spot on in terms of data analytics as a skill. employing people who have a degree of coding experience to create MI that is bespoke and accurate for analysing the whole vast array of data that you have in your organisation, could just be that competitive edge that is needed in a post-pandemic environment. Just time for a couple more questions, Kirsty. This one's a complete change of tack. It's more people related. So have you implemented any new measures in RSM with regards to catering for employee well-being during the pandemic? And do you see these new measures as a permanent fixture going forward?
So the answer to that is absolutely yes, we have. I think there are a few things. One, the pandemic has created certainly real stresses on people's physical and mental well-being. We have certainly upped our engagement and communication with our teams. We've introduced, been running a scheme which is coming to an end called January, for people about sharing the things they're making sure they do, like for half an hour every day to improve their mental well-being. We have free online sort of counselling sessions that people can utilise. We've been doing mental health first aid training. So we're really upskilling. And so the pandemic has really shone a light, because there's it's a real inflection point for people. But I think there's just a general awareness nowadays that, a mentally and physically healthy workforce is, frankly, is better for the bottom line. And so there's more pastoral care needed. Albeit, I think a quote I've heard, but we're not the government, so we can't fix all of the world's ills, but what we can do is make the environment that people work in as pleasant as it can be and as supportive as it can be.
That is true. In our organisations, we can do what we can do for our team members and our colleagues, but ultimately we're not the government. Final question in the last couple of minutes, Kirsty. You mentioned right at the introduction to the event about M&A activity being very buoyant, very busy. Are you seeing organisations thinking about just splitting off and selling non-core assets or deemed non-core assets in order to finance some of the activities that you've mentioned just in this session, IT as an example?
We absolutely are. We're seeing all sorts of deals, but actually carving out divisions or teams because they may not be part of the direction of travel that people want to go on in the future. That doesn't mean those businesses aren't of value somewhere else, but perhaps they're too small, in the wrong geography, the wrong service or product that people want to invest in for the future. That those deals aren't without their complexities. You've got to work out, typically things do have a requirement to use some head office still, but actually people don't often think of it, they often think they have to sell the whole, but actually just selling the part might be a better answer. But certainly it is another way to rebalance the balance sheet and use the cash to go down other avenues. So it's actually, and the tax regime for that is pretty advantageous as well.
Thanks, Kirsty. Fantastic. Look, well done on fielding those questions. That's no easy task.